Hey everybody, on today's show we are going to start what we're doing is a series on low and no money down credit scores. We're going to kind of give you that 411 on all the different things that are available to you as we work into 2020. We're looking for different options for our buyers to make sure that they get the best loan that is available to them. And so we're excited today to have Ben Hawkins with Sierra Pacific in with us, and today we're going to talk about FHA loans. That's one of the loans that is a low money down option. So we're going to kind of have a Q&A with Ben a little bit just to tell you a little bit more about that particular loan. Ben knows all about that, and so we're going to kind of have him answer some of the questions that we commonly get. And so with that, we're going to kind of jump in. Ben, appreciate you being here with us.
Chris, it's always an honor and a privilege to be in your company and be on your show. This is great.
Well, cool. Well, we're going to jump right in. So one of the most common questions that we get is involved with credit score. So as we're talking about FHA loans today, what is the minimum credit score that is basically required for an FHA loan?
Well, for FHA, Chris, we can go down to a 580. We actually do have some brokered options outside of Sierra Pacific that we can facilitate a file to if it's below 580, down all the way to a 550. Now, those are typically pretty difficult to get done, right?
Sure.
So as far as getting an approval in our automated underwriting system, which is what we utilize to pre-qualify your clients, typically the automated system likes to see things between a 600 to 620. And to look for compensating factors. I've gotten a lot of loans done, FHA, that do have 580 credit scores because folks had assets in the bank. They had a 401k that we were able to show stability. If God forbid something happened on their job, where they had a crisis or they got sick, that we can show that they have a little bit of money to fall back upon to make their mortgage payment.
Yeah, and of course, the credit score obviously is not the end-all be-all. It kind of paints part of the picture.
Correct. And
so, but people do want to know what the minimum is and things like that. And obviously, based on the rest of their profile, we'll kind of figure out from that point what they can do. But along those lines, let's say somebody comes to you and they've got that score that's in the lower fives, and maybe there's some things that theoretically they could probably get it done, but there's some things that they need to do. What options, when somebody comes to you like that in that situation, what options do you have to kind of steer them in the right direction to get approved and kind of cure some of those things that are keeping them from being approved?
That's a great question, Chris. Before I refer folks out for credit repair, credit restoration, what I always do is invite them into the office. If they've had some credit troubles, credit hiccups, I invite them into the office for a consultation to go through and utilize what's called our What If Credit Score Simulator. So at Sierra Pacific Mortgage, what we can do is actually take their credit report and we can plug it into the What If Simulator. And say that you owe $800 on a $1,000 limit credit card. Your credit score is going to be negatively impacted by carrying that revolving balance over 30 days. Credit is like a piece of pie. 35% of your credit score is derived from making your payments on time. 30% is the limit to balance. That is on the credit account. So what we can do is say if you owe $800 on a $1,000 limit credit card, we can actually show, okay, they're going to pay that off, pay it down to a zero balance, not close the credit account, not close the account completely, leave it open so it's a positive trade line reporting. But what we would do is show like a zero balance. If you pay the credit card off, you would be surprised how many folks will see a jump and increase in credit score 20, 30, 40 points immediately. And what I can do is also plug that in on any other accounts that they may have, showing them being paid down, paid off, what have you. And it gives me a readout from an immediate standpoint on what the credit score would end up reflecting to be all the way out to 2 years. So if anyone has had some hiccups in the road in credit, credit repair isn't always the only option. Credit restoration companies or what have you. We can actually take a look at it here at Sierra Pacific Mortgage and try to get you on the right track.
Okay, so what I would take away from that as a potential buyer is that if right now my credit score is a little bit subpar of what it probably should be, then I would say, Ben, I need to come to you and I need to put in this, here's what I've got, and let's look and see what I can do if I want to buy a house 3, 6, 9 months down the road.
Absolutely.
So that sounds like a good prescription for getting somebody where they want to be. They may not can buy today, but maybe in 6 months they can buy.
That's exactly right. We're not about everything just being immediate. We're about the long-term relationship, and we're happy to
And just to clarify, there's
no
no charge to do that service.
absolutely
right?
free consultation. I'm not the type of person, and we're not the type of company just to tell people, sorry, it can't be done, goodbye. We don't do that. We care about each individual that we're entrusted with serving, and that you as real estate agents, specifically you, Chris, I love working with you. The folks that you send our way, we definitely want to make sure that we explore every single option and avenue to be able to get them in the right track to home ownership.
Well, appreciate that. That's great information for everybody out there. The next thing that we'll kind of segue into is down payment. Now we're talking about FHA loan again, so that's another thing that people want to know. Well, how much money am I going to need to bring to the table? And so, and there's no hard and fast answer about that. But let's talk about FHA a little bit about what are the requirements for what you have to bring to the table in terms of a down payment to buy a house.
Well, FHA is a very minimal down payment. It's one of the lowest ones that we have available outside of 100% financing, and that is 3.5%. So if you're buying a $100,000 home as an example, $3,500. So the down payment scenarios with FHA are very affordable, and folks really like the flexibility of that. Also, too, Chris, something that a lot of folks aren't aware of, if, say, you don't have the money for the down payment saved up, you can get a gift from a relative. FHA will allow for 100% gift funds for the down payment from a relative. We just have to get a gift letter signed by the relative and show proof of funds that the gifter is providing. So it's there's a lot of great options there. Low down payments, 3.5% down. Just a great product.
Okay. Well, you kind of beat me to my next question, which was talking about down payment assistance. But along those lines, let's talk about shift to seller contributions on that. So let's hypothetically say that we have a client, we're going to make an offer on the property, and we're trying to get as many things paid as possible. What are the limitations in terms of getting seller paid closing costs? And does that factor into the 3.5%, or is that excluded from that? Can you give us a little more detail about that?
So 3.5% just stands alone for the down payment. It's a separate thing. So the closing costs are another entity. Seller concessions on FHA and government loans, which FHA is a government insured loan, you can go up to 6% seller contribution. Now, here's the thing. In most cases, we're not seeing closing costs being 6%, unless you live in an area where the tax rate is inordinately high, or you have insurance costs that you've selected a premium that may be on the high side. We're not seeing that. So the seller can actually pay for all the closing costs, if so negotiated by a great realtor like yourself. And 90% of the contracts that we receive these days seem to have some seller contributions towards closing costs.
Yeah, that is pretty common, and what I'll tell the folks out there is that typically what we do is in these situations where we know that we're dealing with a borrower that wants to try and limit as much out of pocket as possible. Once we identify what house and what price range, we'll go back to Ben and we'll say, look, let's look at this house and how many, estimate the closing costs so that we're making sure that we're asking for enough, but not too much where we turn off the seller and things like that, because there's kind of a fine line that you have to dance when we're presenting an offer. We want it to be in the best position for you, but not to be a situation where, particularly in this market where a lot of first-time home buyers are competing, we don't want to put you in a disadvantage just by throwing out a random number that you may not even need closing costs anyway, and then you're competing with another one that has done their homework and says, oh, well, we're not going to need this much in closing costs, so we're going to shave it down to this number, which we know will cover what we need. So, that's something that obviously, and the buyer doesn't necessarily know that, but that's part of the process for us in dealing with Ben, that we go through that, so we put you in the best position to, in the FHA, for example, to only have that 3.5 and have the rest of your costs covered. And then of course if you can get the gift as well, that helps.
And something else too I would point on as far as closing costs are concerned, Chris, is folks are able to take a slightly elevated interest rate if they so choose to. If the seller won't budge on the closing costs or whatnot, it can't be negotiated because you're in a multiple offer situation or what have you, they can take a slightly elevated interest rate and obtain lender credits towards closing costs. So we can absolutely do that for folks as well to help make up the difference if the seller paid option is just not on the table.
Yeah. And so since you mentioned interest rates, we'll kind of talk on that for a second. And I know interest rates are going to depend on your borrower and their credit score, things like that. But in terms of a loan product, if you had to put a label of good, better, best on an FHA rate in general, what would you say about that?
FHA rates are fantastic. They're lower than conventional rates that we see on the market right now. Government rates are priced pretty much one and the same in a lot of cases. VA, FHA, USDA, you don't see a lot of deviation from that. But with FHA financing right now, we're seeing rates in the low to mid threes depending upon what you qualify for in a 30-year fix. So now is an excellent time to purchase or refinance your existing mortgage. A lot of folks are coming and doing streamlined refinances with FHA with me right now. That we did a couple years ago when rates were a little higher. But as far as the rates are concerned, FHA garners you the best rates on the market as far as mortgage financing is concerned. And also, too, the great thing is this. If, say, your credit score is in the mid to low sixes, you're still going to get the same rate that somebody with 750 credit would get on an FHA loan. Wow. There's not a lot of deviation there.
Well, what I'm hearing from you right now is that obviously FHA sounds really good. So let's, just to be transparent, there may be some caveats and things that go along with that. So let's talk about, is there PMI on this loan, and how does the PMI on an FHA differ maybe from a conventional?
Certainly. Well, conventional financing, what we do is we shop through 5 or 6 of the top mortgage insurance companies in the country to shop for your mortgage insurance rate. That's based on the down payment or the loan to value, if you will, your credit score, your debt to income. FHA caps their mortgage insurance completely at 0.85% monthly. Now, if you put down 5% or more, typically that will change to 0.80% monthly. Okay, as far as the mortgage insurance rate. Here's a couple cool things that are coming about right now with FHA as well. The House Financial Ways and Means Committee, back about 6 months ago in June, voted on a bipartisan bill. It was in that committee. It got passed to have FHA mortgage insurance fall off at 78% loan to value, as it does with conventional financing. Okay. In 2013, FHA felt like they were running out of funds. So what ended up happening was Congress got together and made it where instead of the mortgage insurance falling off of FHA at 78% loan to value like it does with conventional financing, sure, they decided that it's going to stay on there for the life of the loan. So now the Financial Ways and Means Committee in the House has decided that they have a bill put together, legislation, the FHA Affordability Act is what it's called. If you want to look it up, you can check it out online. Sure. Great information. And they actually did an amendment to it in November. So I'm really excited about seeing that being voted on and passed through the House, passed through the Senate, to have that come off. Because as of right now, the mortgage insurance does stay on for the life of the loan. And again, it's 0.85% monthly.
Okay, well, we'll definitely keep our eyes on that, and if you hear that that's going to be pushed through, obviously keep us in, and we'll let our clients know, because that is a big thing, because that changes what your monthly payment is.
Absolutely.
And so and depending on what kind of house you're buying, things like that, it can make a big difference.
And also too, Chris, it gives folks that maybe want to put down 20% but have got a lower credit score the ability not to pay mortgage insurance. Right. If that does pass, or when it does pass. I feel like there's enough bipartisan support on this. I mean, how politics are. We're not getting political here, but we all know how that goes. And sure. I feel like it was a bipartisan bill that was passed with a committee that I feel like will go through the House and Senate to help relieve the stress of that from borrowers. And also, too, again, when you put down 20% on an FHA loan, you would have no mortgage insurance at that point. So we'll keep you and your awesome clients and viewers of your videos up to date on all that stuff moving forward.
All right. Well, just kind of moving forward, let's talk a little bit about home prices. What are the maximum, like with this FHA loan, what is the maximum, level of house right now? How much can an FHA borrower buy a house for right now?
That's a great question, Chris. They actually increased the loan limits here in New Hanover County from $313 and change all the way up to $331. In loan amounts. So we had, as an example, with one of your team members recently, we had some clients that were purchasing a home for $335,000, I believe it was. Well, they couldn't do the 3.5% down because the loan limit increase hadn't taken place. Right. So they had to bring extra money to closing for the down payment to make up that difference to achieve the loan amount. If they had bought that house, that same home, which probably wouldn't be on the market, by the way, because it was such a great deal that your team member, I believe it was Matt, that got for him. Sure. Excellent deal. But if they were to have purchased it today, they would have been able to put down the 3.5% instead of having to bring that extra money to make up the difference on the loan amount restriction. So you've got it over 331,000 now. It's extremely exciting. Great time to buy in our area. And FHA is really kind of spreading their wings. Conventional also went up too, Chris. It went up from 484,350 to 510 and change. Okay. So we've seen increases in loan limits for products across the board.
Okay, which is good because obviously prices are kind of going up. You know, we live in that coastal market, and so that's obviously what we're dealing with day to day.
Certainly.
Let's talk about property types for a second. So somebody with an FHA loan, you know, not everybody wants to go live in a single family home. You know, we have condos, townhomes, things like that. So what are the options available with an FHA? If somebody wants to go FHA loan, are there limits on what they can, you know, what type of home they can buy?
You know, FHA is a primary residence loan, so you couldn't buy an investment property or things of that nature with it. But you can absolutely get into a condo. The condo association needs to be approved by FHA, and we simply can help with that process if it hasn't already been completed. There's easy ways to look that up to make sure that the condominium complex is approved. There's certain caveats and restrictions there. There's a lot of detail to that, so I won't get into too much detail with the condo restrictions. Sure. But at the same time, you can get condo financing with FHA, townhomes, attached, detached properties, single-family residence, manufactured housing. You can buy a manufactured home through FHA, modular, all that good stuff.
Okay, that sounds good.
Yeah.
And you know, shifting to income for a second, let's talk about income a little bit in terms of, you know, we just finished doing a video on debt to income ratio.
I saw that; it was great.
Explaining that to a lot of people that don't know. So, with that in mind, you know, for this particular FHA loan, you know, what kind of debt to income ratio, you know, does someone need to have, you know, for the FHA product? And if you kind of want to tie in, are there any income restrictions? You know, does somebody, at what level does somebody make too much money, you know, for an FHA loan?
Great question, Chris. FHA has no income restriction, so you could make $1 million a year and get an FHA loan. It doesn't make any difference.
Good to know.
So you're good to go there. No income restrictions. Debt to income, depending upon credit score and also assets come into play. If say my credit score is lower and I want to do an FHA loan, a lot of times I won't be able to get a pre-qualification or get approved through the automated underwriting system unless I've got 3 months of reserves. Sometimes it'll call for 1 month reserve. So having some money in a 401k in essence would get you over the hump there. Debt to income in that perspective with FHA, I've gotten loans done. Matter of fact, I have one that's closing next week that's actually at 57% debt to income.
Wow.
But they also have a higher 700 credit score, and they've got money in the bank. So it basically every loan's different, Chris. Every situation's different. So we want to.
Well, and that's important for everybody to know. I mean, essentially, you know, when we bring somebody to you, you know, with an FHA, we're kind of putting it in the box and saying, you know, government, tell us what you think of this.
Right.
And then based on what they, you know, give you back, then you have to kind of be a problem solver at that point and say, okay, well, here's the changes we need to make this, you know, good for what they want.
Certainly.
And so, you know, just like we have things that we need to problem solve on the buyer side, you know, with the deal itself, you know, that is your job, and that's why, you know, we have to have great lenders like Ben that don't just put something in the system and it says yes or no. You know, we've got to think outside the box, and so Ben does a great job of that.
Thank you.
So let's, while we're talking about income, money, things like that, what are the fees on FHA loans?
So FHA does charge a 1.75% funding fee, which is 100% tax deductible, and they charge that on every loan. It's not a Sierra Pacific fee. It's not any other lender fee. Period. As far as who you're utilizing for financing, that's what FHA gets on every one of their loans, and it is financed in over 30 years, so it's not due at closing. It can be paid at closing if you want to, but most folks just finance it in over the 30 years. So that's really the only FHA fee that goes directly to them. Worth mentioning, other than the mortgage insurance, which we already discussed. Outside of that, there's no FHA pertinent fees that would apply to their transactions.
All right, good to know. And so as we kind of wrap up, you know, in general, as a summary, you know, pros and cons, how would you say, and maybe this is something where you say, well, out of all the loans we do, FHA is X percent of what we see in our business. You know, what would you say in general, you know, for somebody trying to decide what kind of loan that they should get? And obviously they will lean on you for, you know, to guide them in the right path. But that person that is FHA is where you're going to take them. What does that person look like, and what are the pros and cons that they need to be aware of just in general for that particular loan?
FHA really crosses all boundaries. I mean, all borders. There's really not a segment or segregated group of clients that we offer FHA to, simply due to the fact that sometimes folks, even with perfect credit, have higher debt to income ratios. Mm-hmm. Maybe they don't want to put down, 10, 20%, 5%, whatever, 3% on a conventional deal, because on the 3% conventional deals, you do have income restrictions. And it's based on the geography. It's based on the property address, sure. Much like USDA financing. So with FHA, really what we do is gear it towards, as an option towards anyone that may be looking for a low down payment, a low rate, and just a good old-fashioned fixed term with no prepayment penalty on their mortgage. So it really is for everybody. It's a universal loan.
Great, and we do obviously see a lot of those. I'd say they're probably close to 50% of what we see coming across our desk, in our market, depending on the price point, certainly.
And Chris, it is great for folks that have had some bumps in the road in credit. You don't have to have perfect credit to obtain an FHA loan and get an amazing rate and the mortgage insurance capped at 0.85%. Because again, if you go conventional and you've got a credit score in the mid to low sixes, mm-hmm. A, it's going to be tough to get approved. B, it'll be tough to get mortgage insurance on it. And if you can, the mortgage insurance can be 1.5, 1.4% monthly. Sure. Yeah. So it's and by the way, the 1.75% funding fee I was mentioning, Chris, I want to make clear that's based on the loan amount. Okay. So I forgot, I failed to mention that a moment ago, but it is based on the loan amount.
Okay, sounds good. Well, that's great information. I really appreciate you coming in and talking to us about FHA today. If somebody has some questions for you about their situation and maybe interested in trying to talk about buying a house this year and wanting to find out what loan products that may fit them, how can they reach you?
They can reach me on my cell at 24/7 at 910-352-3373, 910-352-3373, or visit my website at lendwithben.com.
All right, well, Lynn, appreciate Lynn. I said Lynn. Lynn with Ben.
There we go.
So appreciate you coming in today.
Chris, it's a pleasure. Thank you.
Thank you for all you do for our clients. And guys, we'll talk to you soon.
Take care.